Today, I'm going to break it on down. I'm going to show you exactly why you win and exactly why you lose. I'm going to go over step by step on how your mind thinks and what you need to do to change your mindset. So this is a typical spike. This is a typical breakout. You can see that big red 70%. That big red 70% is going to represent the stat that 70% of stock traders fail, or if you want to say 80% of stock traders fail. For this example, we're going to say 70%. And we're going to talk about why the 70% fails on a typical breakout. Then on top of that, we're going to break down all the other areas of where we can get in to be successful. So let's think about this here, traders. The first area that we can be successful is going to be right here, the early swing traders. The early swing traders are going to be that 2% region. Now, why is it the 2%? Well, it's going to be very difficult to be within these early swing traders. It's not easy to find a play before a big time breakout. You're either going to have to be studying that play prior to maybe some hot news coming out. Maybe it's been on your watch list. You have a hunch about this play. You have been watching it over the last few days, weeks, months. You're super early to some sort of stock. 2% of people out of 100% are going to be getting in before that hot press release, before that break, before that move. That's a very difficult thing to do unless you're really researching a play and you're really watching a play over time, getting ready for that perfect entry. Where are most people going to get involved in? Most people are going to be getting involved in on this 15%. Let's say a very hot press release comes on out. We're going to say that a stock comes on out with positive phase 3 data and we have just cured cancer. Wouldn't that be an amazing press release where the stock would go on a huge spike, huge rip, and huge run? Well, who are the 15% that are getting involved on this play? These are going to be people who are waking up early. These are going to be people who know what to look for in a hot press release. These are going to be people who have a news scanner that is going to show us absolutely all the hottest news that's going to be coming on out. So we can just filter this out by hottest news and just see, okay, hey, what's the best plays of the day? So if you have a news scanner, if you're prepared, if you know what to look for, if you're awake at the right times, and you know how to get in and out of a play during pre-market, that 15% are going to be the traders that know what's going on, have experience, have education. This is going to be a profitable time. Now we're going to get involved into that 70%. That's 70% of traders where you might be saying to yourself, Deck, what the heck? Why am I always buying it on a play and it's always falling on me? Why is it every time I jump on a stock, it reverses on me? Well, we need to think about this. Are you getting in before the hot press release? Nope, not at all. Are you getting in when the hot press release comes on out? Well, I'm getting in after the big time move when the market opens on up. If you are getting in on the play after the move has already happened, you are trusting your eyes way too much and not trusting your logic. You are trusting your sight and not trusting your education. You have to say to yourself, if I see a big time spike, it's already too late. If you see people on social media already posting profits, it's already too late. If you start seeing people start posting, get in now, it's up 100%, but you're still early. We're gonna go up to $20. You're too late. Do you know why? Because this is how it breaks on down here. The early swing traders are going to get in 2% right here. We're going to be having our breakout traders. They're going to be buying as early as possible as well. They're going to be buying right here. This is great because we're buying near the bottom. Now, let's take a look at where the 70% are going to start getting filled. The 70% are going to start getting filled after we start finding it on social media. After they start saying to themselves, oh wow, people are talking about it. After the market is now open. After their favorite mentor buys in because now it feels trustworthy. After whatever. So now they're buying in from here all the way up to right here. Now, what's funny about this? Right here is going to be where, take a look, the early swing traders are going to get out. If you just went from here to now up here, it's time for me to get out of this play. Now, let's also think about the breakout traders. The breakout traders just went from right here all the way on up to right here. This is time for me to get on out. So here comes you at this moment saying, yes, a huge big time spike or a huge big time top gainer. It's finally time for me to make my money. And the moment that you start getting in, these guys from earlier start selling. And now the stock starts retreating and the stock starts falling. And you say, wait a minute. Why is it when I jump in on the play, it's starting to fall and fade? Well, team, I'm going to tell you right now, if you are jumping into a play and it is starting to fall and fade on you, it is because you are in that top 70%. The 70% of losers, the 70% that is not in early, the 70% that is waiting too long, the 70% that is being too hesitant, the 70% that's not waking on up, the 70% that doesn't have an education, the 70% that doesn't have experience. If you are not in early, you will be sold off at. I said this earlier here, traders, but Wall Street does not care about you. Don't get offended. They don't care about me either. They want to make as much money as they can. They are greedy sharks, and all they want to do is make as much money as they possibly can. That's what Wall Street traders want. They don't care if they take it from your grandma. They don't care if they take it from your niece. They don't care if they take it from you. They want to take your money. And how are they going to do that? By getting in before the spike and the rip. And then when the rip happens, retail traders that just download Robinhood or whatnot say, ooh, this stock's spiking, I'm going to buy it. And when you're buying into your play, you are buying into these traders' shares that are selling them to you at the very tippity top, which is now momentum starting to turn. Stock trading is almost a game of opposites. When you see a monster spike, do not buy it, short it. When you see a monster dump, do not short it, buy it. But that's where you have to change your education. That's where you have to change your mindset. Because guess what's now happening at this point? You're now saying to yourself, this is unbelievable. I can't believe when I jump in on this play is when it's starting to fall on down. Adding to that momentum is now you see people starting to say, hey, let me jump in and start shorting. I see that we have this big upper shadow right here, right? We have this big upper shadow at this very top. I'm going to start shorting. And now this 10% of traders, they start jumping in and betting against it. Isn't this crazy to think about? The moment that you jumped in on this play is the moment that the 2% of traders start selling, the 15% of traders start selling, and now the 10% of shorters start jumping in on this play. So the moment you jumped in, everything starts going against you buying in at the very tippity top. Pretty nuts to think about. So now you say to yourself, oh, I can't believe this. Guess what? I have to start getting out of this play now. So now you start getting out of this play way down here. The blue traders got out up here. Green traders, the breakout traders got out at the top. And now you are buying at the bottom. Now, you guys ready for this? How many people have had this happen to them before? So we start getting an idea of what we're looking for. You jumped in on this play right here at the top because this is where you feel confident after the spike. Now you start getting out right here. You start getting out right here. And the shorters also start covering their position in this area because we just had a pullback. And now get ready for, guess what? The dip buyers to start moving on in. And as the dip buyers start moving on in, finding an old bottom off of the old support line, this is where you start going ballistic. This is where traders say, I can't believe this. This can't work out any worse for me. I bought in on the play. Guess what happened? It went the other way. The moment it starts going the other way, I get out of my position. I get out of my position, and then now guess what happens? Now it's starting to go back on up. And you're saying, this is ridiculous. I'm not going to chase this. I'm not going to buy at the very tippity top again. I refuse. I'm not going to do that. But now the dip buyers are in. And now guess what happens? We start breaking on out. And now we start seeing, of course, the breakout traders start moving back in here. Breakout traders start moving on in. Guess what happens? I can't believe this. It's spiking all the way back up to the high. It's spiking. Why did I get out of this play? I'm jumping back in on it. I'm jumping back in on this. And then guess what? You jump back in. Dip buyers are now ready to take profits right here. Breakout traders take profits as well. They're good if they got a little bit of gains right here. And you're saying, I cannot understand what's happening. Every time I jump in on a play, I jump in here, I lose down here. I jump in here, I lose here. I'm done with this play. I'm done with this play. This makes no sense to me. I'm over it. Moments later, as you guys realize, so what happens? It's the circle of life. Breakout traders start moving in, early swing traders, and it happens over and over and over again. Think about right now, who here says that I am describing their trading career? I think we've all been part of it at some point, but who here is saying, Deck, you are describing my trading career to a T. I am buying in, I lose. I get out, the stock goes up. I hold longer, the stock goes down even farther. We are basically playing a game of ring around the rosy when you're just the free ATM machine paying us all out. That's what it is for experienced traders. Experienced traders love when we have new traders in the market. You know why? Because they're just giving us all the money. That's all it is. That's the sad reality of it, guys. That all new traders are is they say, oh, everyone's buying this play? Here, I'm going to buy shares, which are just paying out traders from the earlier positions. I don't want you in that, which is why you're watching this lesson right now. I don't want you in that. So I will tell you right now to stop being in that 70%. Oh, Deck, thanks. Thanks for telling me to stop being in the 70%, but how? How do I get out of that 70%? Well, traders, that's why I teach you. That's why I'm here. That's why we have a 250-hour video library over on Tradecaster, teaching you literally everything you need to know. 2023 bootcamp. We have lessons on level 2, lessons on shorting, lessons on candlesticks, lessons on indicators, lessons on support and trend lines, lessons on how to buy in pre-market and after hours, making sure that you know exactly what to be doing at all times, coming out on top. It's crucial that you guys realize this. But if we have to take a little crash course right now, breaking it on down, as I stated before, very tough to be in this 2% region. Very tough right here to be in that 2% area. But if we start seeing a stock move on up, we always want to be able to recognize where resistance is at. Once we recognize where resistance is at, we know that we are getting this U-shaped breakout pattern. U-shaped breakout pattern, guess where the big buying volume moves in? At the break of this resistance line. You either, I know, very difficult to be right here, but every single trader can be right here in this 15%. You just have to know the U-shaped breakout pattern, break of resistance. This is where buying volume comes on in. Pull the trigger. Jump in here. If you wait and move on from it. If you see that we are now going from the price of $5 to now up to the price of $15, unfortunately, you're too late. And that's okay. Guess what? There's going to be a million other breakouts. If you walk up to an attractive man or attractive woman and you say, hey, will you go out with me? And they say, nah, sorry. It's okay. There's a million other fish in the sea. If you see someone across the room, but then you see that they left, they go down the elevator, they jump in a taxi or a cab and they leave and you didn't ever get to speak with them, it's okay. Guess what? You will be able to find someone else that you probably like just as much in the future. Same exact thing with stock trading. If you miss a breakout, it's okay. You don't got to say running down the taxi, come here, you're the love of my life, come back here. You're probably going to scare him away and it's not going to work out anyway. This is you running down the Uber and saying, you're the love of my life, I need you in my life, and has no idea who you even are. So the thing is, don't put yourself in that position. Remember, game of opposites. When you see a massive breakout, be in this job. Be in the shorter job. If you miss the breakout, you can be a shorter. So if you miss the monster spike, look to nail it on the way on down. If you miss the monster spike and you miss the monster dump, look for a dip buying position. Where was the old breakout? Well, on that U shape. Let me go ahead. Old support and old resistance will turn into new dip buying opportunities. So I can go ahead and bounce here. There's literally only one area you cannot buy, and that's chasing. Chasing the top, chasing the bottoms. Those are where you are going to have issues. So if you see a breakout and you buy in at the very tippity top, you are going to lose. If you are again at the tippity top and you short it, awesome. Be willing to lock in profits, get on the dip buy. You can miss the 2% early swing trader. You can miss the 15% trader. You can miss the shorter and you can still get the dip buying position. If you jump in on the breakout trader, you can also get the shorting position. You can also get the shorting position, come back on down towards the dip buy position. You literally have everything going for you. You just can't get emotional and buy where everyone else is buying every single time. That's all it is, guys. So I know it gets very tough in the actual real-time moment. But remember this lesson. Remember how strict I am with you. There are literally 1, 2, 3, 4 different areas that you can buy. Early, breakout, shorting, or dip buying. Stop purchasing positions after social media tells you to, where you are just going to end up losing. Sound good? I want to help you. I want you to be successful. I want you to nail this, but I gotta have you get in at the right areas. 4 different places that you can buy. Just avoid the chase and you'll come out successful.